resistance mainly. I hope you guys can remember what we talked about. Or should we just do like a small recap of what we talked about and see how everyone is doing?
Yeah, it's fine.
All right. So the last time we talked about support and resistance, basically we mentioned how you can do a top-down analysis or it depends with what type of a trader you are. So the most important thing is to determine what type of a trader you are or what you want to become. But then it's also something that I don't recommend for someone to just think they just want to be that. It has to depend on your personality, what you're comfortable with. Are you comfortable with scalping, risking more at once, or do you like swing trades? It all depends with what makes you handle a stressful situation properly. So for me, I like to trade the 1 hour time frame. Or well, I don't like to swing trade most of the time. And the 1 hour time frame gives you trades that you can enter, and after an hour or so, or even less, way less, you can get out with a lot of profit. So, and I don't like to leave trades open and then I have to go on with my day knowing that I have something that's still open. So I would like I that's why I like to trade the 1 hour time frame. So let's say it's the beginning of the month. So what you usually would start with is checking your monthly candle every beginning of the month. So we all know these are our candlesticks. We use the candlesticks. And then you go in your monthly time frame. So the most important thing, so actually the very important thing is always draw zones that are very close to the price, zones that you'd think they're going to actually affect the market, something that's very close to the price, something that might be reached anytime soon. So on the monthly time frame, since it's a monthly time frame, it's not something that you're going to see every day. So it's okay if the zones are far, but as long as they are near or close to where price is at that moment. So right now we have support and resistance. I mean, we have resistance right here. That's where price is at, and price has been failing to break that resistance for a long time now. So we know it's a very important resistance. And if price is to break that resistance, price should move all the way to the next resistance. Why? Because if you look to our left around this area, we have clean traffic. This is clean traffic. There isn't much going on that candle. It's just a straight candle. It's in a consolidation, but it's just one candle in that area, which gives us clean traffic. So that's where we would expect price to go to if it breaks that resistance because of that candle. Then if it fails to break this resistance where price is at, I would expect price to make a huge drop to at least somewhere here. Why are we putting a zone right there? If you look to our left, right, around this price, you can see how when price came down, it made a support around this area and then it went all the way up and created a resistance around this area. So when price came all the way down and created a new low, price too came back up to our previous high and respected the resistance that was created by this candle, which gave us a strong resistance because price came down again and it still came up, and it did break here, but before it broke, it did give us a rejection. This rejection failed to give us a new low. As you can see, our previous low was right here. So price came down, right? It gave us a low right here. And then price came down, it gave us a low right here. Then it went up, created this resistance, and then price came all the way down again. It gave us a new low. It went all the way up and gave us a new another resistance. But then this resistance was just respecting the previous resistance, which was created right here. And then price came all the way down to give us the same low and respected the same low. So in other terms, we can say price is now consolidating. But if price had closed below this low, then price would be trending. But it came all the way down and still pushed up to close above the support that was created by this low, which means price was going to come all the way up to retest this resistance, the one that has been tested for a very long time and keeps on getting rejected. That's a very strong resistance. That's how you know it's a strong resistance, because or a strong support, because price kept going down all the way down, but it came all the way up, retested the resistance or the support, and still rejected. And it's on the monthly time frame. That means a long time took for price to come all the way back to that zone and still get rejected. That's what gives us a very strong resistance. It's the same thing with how price is failing to break the current resistance right now, because price failed to break the low for 3 months. See, this is 1, 2, 3. It failed to break that low for 3 months, and then price broke with this candle right here. You see this bearish candle right here that was created when it broke the low. And if you look right here, price, when it rejected this low, price came all the way up and retested the same resistance, right, which price rejected with this red candle right here. See, this was the rejection. And if the rejection was strong, it was strong, but there wasn't any volume to push price lower to back to our support. And if price is consolidating, see, this is what we call consolidation. Price is in the same range. It's going back to the support or the resistance. It's failing to break above or below, and it stays in that same area. So if you see price having that it has made this low, this is the low that has been established. So if price was properly consolidating or ranging, see, when price went up and it got rejected by this candle, price should have come all the way down to our support. That's how consolidation works. So that's what you'd be expecting when a rejection happens. But if that fails to happen and price creates a new low right here, it created a new low. So price didn't go back to our previous low. It actually created a new low. That means price is now pushing higher. So the higher it pushes, the more it's likely going to break out. If price had came back all the way to our previous low right here and rejected the low and then came all the way up, I would expect price to reject that resistance again, because that's what price is giving us. It hasn't created a new low, it hasn't created a new high, but it's playing around that area. But price created a new low. So when it created a new low, that meant price is going to push higher. And from this candle, that was our rejection candle, creating the new low. And then from there, price pushed up, it landed on the resistance. And instead of rejecting our resistance again, which it actually did reject for a little bit to create the wick, this wick is very important. That wick is that is the most important thing, because that confirms your trade, that confirms your buy trade. So the reason why I'm saying that confirms your buy trade is when price made the rejection around this area, right? It rejected this low. It rejected for price to go lower, and it created a new low, right? When it created a new low, we got a bullish candle, and it closed as a strong bullish candle right at the resistance. So when this next candle opened, right, instead of price pushing straight up without giving us a low, if you can look at this candle right here, if you look at the wick, it does not have a big wick. We can actually say it doesn't have a wick because it's very tiny. If price had done that immediately when the new candle opened and started going up, we would not take that trade because price immediately broke the high of the candle. Where price closed, it would have immediately broke that high, which invalidates that trade. For us to have a strong trade, to have a proper trade, a well-managed trade, we need the candle to create this low. So when price opened, instead of going straight up, it did not. It came down first. It made a correction, a correction or a retracement. So a correction or a retracement is, I'm not sure if some of you might know this. So we get an impulse, we get a correction, and we get an impulse. Price does not move in a straight line. We first get an impulse, that's the move up, or it's either it's coming down, it makes a correction, and it makes another impulse. Price does not move in a straight line. It has to do this for it to keep on going up. And without the correction or the impulses, we can't get a well manageable trade. So when price opened the new candle, it made a correction first right here, creating this wick we have right now, and then price pushed further up. It didn't just open and then start pushing up. It made a correction first. So if you knew this, you'd be anticipating price to push lower first. And then when you see price approaching the resistance again on the lower time frames, that's when you enter because you're already anticipating for price to push lower. And I can also show you this setup or this trick that I'm teaching you on the next candle. So we have price breaking out right here, right? And then we created a new high. So when price created a new low, it also created a new high. That's where we have the breakout. And when price break out, it retests for it to continue going up. If price breaks below, it retests for it to continue down. So when price broke out right here, it created a new high right here. So we have a new high right here. And then we have the next candle right here. So as you can see on the next candle right here, it did not go up the moment the candle opened. As you can see, the whole body of that candle is inside our previous candle. We have a wick down. So instead of price going up the moment the candle opened, price came down first. That means it corrected first to retest our previous zone. The previous resistance was very strong. As we can see, price kept rejecting the zone. So price broke out, and then the next candle, instead of pushing higher without retrace, it had to retrace first for it to push higher, which confirms our trade. So price corrected, but instead of making a new high, price did not make a new high. It closed at the same resistance that price is at right now, that it has been failing to break for weeks and weeks. So if you want to buy pound USD or pound JPY, pound has to break this resistance where price is at right now for it to continue higher or for it to make a new high. So where price is at right now, that's what makes it a little bit of a tricky situation. It's not that tricky, but it's a little bit tricky situation because on our previous candle, right, price made a new low, but it did not make a new high. It closed within the previous candle. So from our knowledge, we know that price needs to make a new low before it continues higher. So right now we do have a very small wick, which is okay, but a better week would be if price pushed a little bit lower, maybe 50% of the previous candle, and then pushes higher. That would give price better buying pressure. So what price would have done is it would have pushed lower, it would have retraced or corrected lower, right, to give us a lower buying price, a better buying price. So what they would have done, they would have pushed the bankers or the big institutes would have pushed price lower so that they can buy at a better price for price to keep pushing up. That's what they would have done, because right now what retail traders would be doing right now, because price is sort of pushing up, they are buying right now. So as more traders buy right now, right, they would have to push price lower. Remember that they are there for our loss. Their gain is our loss. So for price to push higher, it has to make a new low and then it can push high. So they'll push price lower. Retail traders have probably bought around this area. So when price pushes lower and makes a new low, retail traders are now closing their buying trades in a loss for price to push lower. So when it makes a new low and creates a rejection, instead of price continuing lower as retail traders are expecting, price creates a rejection around this area and price moves up to break the previous resistance. That's how it works. So on this low, retail traders are selling. So when they receive the amount of sell orders that they want, they'll reverse the price. So retail traders would have to close their trades in a loss for price to keep going up. So you know how when you close your trade, let's say you had a sell trade open. So when you close your trades, right, it's actually buying you out. So when you close your trade, it actually pushes price higher. It's the same with the sell trade. If you had a buy trade, when you close your buy trade, it has to sell you out. If you check on your MetaTraders and you go on orders, it will show you that every trade that was a sell that you close, it shows buy out. That's what happens. That's what pushes price even higher to make that new high. So that's what happens. So with you knowing that information, you would wait for price to give you a lower low. That's why people use things like Fibonacci and supply and demand zones to catch the retracement so that they can buy or they can sell at the new levels that has been set for price to keep pushing in that direction, since price does not move in one direction. Are there any questions? No questions?
Oh no. Unless the rest of.
Okay. All right. So if you see a lower low being created and then you see price rejecting that low, right, and then it starts pushing back to that resistance that was created, and if you see price breaking that resistance, that's your confirmation that you can enter the trade. Because when price made a new high, right, price created a new high, right, you had a new high being created right here, you see price coming down and then it creates a new low right here. When price creates the new low and then you see price going all the way up and it closed above the previous high that was created, that's your confirmation to buy. Because when price created the new low, it's giving you the signal. That's your signal. Now you know, oh, price is gonna buy. And then when it closes above the previous high, that's your confirmation. Price is confirming you that it will continue going up. And then if you want to go deeper into it, that's when you know, okay, the bankers, they probably bought when price was still here. That's when they bought. And then when price moved higher, they took out their profits when price reached this area, because all of the retail traders, that's when they were buying. They saw the big bullish candle and they thought, oh, it's time to buy now. And they bought. A lot of them bought. So when they see a lot of buying trades coming in, they're going to take some of their profits out of their trade to push price lower. That's the retracement. That's the correction that we get. So when price pushes lower, retail traders are going to close their buy trades in a loss, thinking, oh, price is selling now. And the more sales they get, they're going to reverse the price to continue higher. So when you see price approaching that resistance and it even closes above that resistance, that's your confirmation to buy. And if it buys, you win. That's how it works. And your stop loss should be right below this new low that was created. That's the whole basis behind everything that goes in the market. So right now on the monthly chart, we might get a break, but on a higher probability, I would be expecting price to go down. We're going to look at it on the lower time frames to see how it's going. But that's how you know what you're doing. That's how you can read the price action. You can read it on the higher time frames, you can read it on the lower time frames. It's all the same. It all makes sense the way it should be. So right now we have plotted our zones. These are our zones for the monthly chart. We're not going to see any of these zones, most of them, anytime soon. The important zones right now on the monthly chart are, these are our important zones right now on the monthly chart. So we have this area where price is at. So I'll be watching price closely around this area because that's a very important resistance. And then this support. So if, all right, guys, I would have to restart the meeting very soon, if that's okay with you guys. All right. Okay. So this is the important support that we have. So these are the important zones that you need on the monthly time frame. So that's what you can do. You can highlight them, the important ones that you're going to need if price decides to do anything. The rest, they are there, they're important, but that's not what you're looking at the moment. And then you go on your lower time frames, you go on the weekly time frame. So everything that we were explaining, you can see it on the weekly time frame. You see how I'm saying this resistance is very strong because price has been failing to break that resistance for 1, 2, 3, 4, 5, 6, 7, 8 weeks. Price has been failing to break that resistance. That's why it's important. And if price gives us a big rejection, let's say if this weekly candle that's printing right now comes and closes all the way to this support and it closes below this support, we're probably going to see a downtrend. The trend is going to change. That's how it works. So the moment price makes a new significant low, that's changing the whole trend, because price is not supposed to make a new significant low. It's not supposed to make a bearish impulse, because right now we're in an uptrend. See, price is going up, that means we're in an uptrend. So if it makes a bearish impulse, that changes the trend, because now we have to start looking at a bullish correction and a bearish impulse. So right now, since we're also going to be looking at trend lines, this is what I'm going to do. I'm going to end the meeting right here so that I can try to start the new meeting and then we can continue with trend lines. Do you guys hear me?
Yeah, I can.
All right, sure. All right, I'll send you the links right now.
Perfect.